Now, after this journey to some rather exotic countries, Kuwait and Qatar and others, let's now turn our attention to the one region that most of you call home, Switzerland, of course. Swiss banks have seen huge inflows of franc deposits from investors all over the place who were looking for a haven from the Eurozone debt crisis. Yet Swiss banks also have a number of problems of their own. Our next speaker is convinced, however, that Switzerland will successfully deal with those problems. He does, in fact, see an opportunity, a market niche for Switzerland and for Swiss banks. He believes that Switzerland will once again, like many times before in history, be forced to do what's best for the country. But what exactly will that be? Let's find out, and please welcome once again back on stage Professor Urs Birchler. Thank you very much for being here.
Well, thank you very much for your kind introduction. I must admit that I actually stole the title, Swiss Finished, from an article in The Economist. The only creative contribution of my own is the question mark after the title. And I'm not sure about how optimistic the view will be I can offer you. I'm pretty sure you will want to shoot me after presentation. I can promise that much. That gun, though, belongs to a Swiss banker. The banker works for a bank, as far as I have read, that has been a criminal exercise for quite a number of years. It started as a very strong bank, then returns started to slow down. The bank became criminal from the top to the bottom. All the employees became involved in criminal activities that wouldn't help with the profitability at the end. The bank was at the brink of liquidation, but it was actually rescued then by the state. This is not a truly existing Swiss bank. It is a bank from literature, to be precise, from Friedrich Dürrenmatt's Oper einer Privatbank, Frank der Fünfte. Dürrenmatt, I don't think, saw himself as a prophet of what would be possible in the Swiss banking sector. My reading is that he wanted to describe the most impossible, unrealistic, the most absurd scenario that he could think of, because his view of the bank was probably exactly the opposite from what happened in that particular institute. What Dürrenmatt was talking about was the possibilities of the individual regarding democracy and individual freedom, or behaving honestly in a corrupt surrounding. He chose a bank, but he says he could also actually have spoken about the state. So that's the stage on which my presentation, or actually Dürrenmatt's play, unfolds. And the following acts, I'm going to introduce the plot. We will get at the cliff, there will be a plan, and there will be an end. Okay. So, but let's start with this bank and state relationship. That is, it has been mentioned this morning, a very delicate thing. And why not start with the banks? In the old times, and I picked 1895 as an example here, actually JP Morgan rescued the US. The US was a bit short of cash, and Morgan thought it was too important to fail, so why not help them? And he was not the first time. From 1200, you remember the Fuggers and all the bankers, they had helped the banks, and they were lenders of last resort, but sovereign risk was the biggest risk for the banks. Never lend to the prince was a proverb among bankers. This period ended around the turn of the last century, and you know, the country episode, the state, 2008, rescues UBS, Confederation, and Swiss National Bank. And that's about the new times, where the State is the lender of last resort to bank, or the loser of last resort, and the banks have become a big risk for the states. It is interesting, by the way, to compare the two episodes regarding the size. The common thing is the dimensions of the rescue packages were around 200 or 130% of an annual budget of the respective states. So that's about the same size. It's in a similar dimension. What is different is that JP Morgan had to put up 10 times his balance sheet in order to rescue the US. And this was a tiny 0.4% of GDP. So in terms of real economy, this was almost a non-event. Unlike the rescue of UBS by Switzerland in 2008, which was 13% of the GDP, and for 130% of the federal budget, the UBS just got 4% of its assets. So it was just a tiny drop for UBS, but it was pretty much a big thing for the Confederation. Today, things are like the old times and the new times combined. Banks rescue or lend to governments. Governments rescue banks when their investment in government paper turns out to be sour. So when I read the story about Greece, I really stop I do not understand it anymore. I wanted to ask Professor Sin. So the Greek banks hold Greek government paper. Then there is the haircut in Greek government debt, and the banks go bust, and then the Greek government actually bails out the bank. Sounds very much like a perpetuum mobile in financial terms. A bit more scientifically, there is a paper by Acharya, Wechsler, and Schnabel that looks at changes in CDS spreads of banks and states before, during, and after the crisis. Pre-crisis, and the blue is the states, pre-crisis, in the run-up 2007 to September 2008, the CDS spreads, the risk spreads of governments did not change that much. But of course, the risk spreads for banks went up because investors felt the clouds are getting darker. The red ones are the banks. During the crisis, September to October 2008, what happens? The risk spread of banks fall, the risk spreads for banks rise, for states rise. Why? The states had rescued the banks. It was like a merger. The good company buys the bad company. So the bad company becomes better, the good company becomes worse. And is it true? What happens after 2008? Well, both rise and fall in parallel. So the merger has been successful in the sense of they represent the same risk now. Okay. That's the stage on which the following plot unfolds. We had these bank bailouts, and they contributed to the increase in debt. But the bank bailouts are not the only problem. There were structural deficits in most countries before and in the past, and there are the future problems with demography coming up. So the big problem today, and Hans-Werner Singh was very explicit about that, is actually debt. Let's briefly look at the European countries, or the industrial economies as a whole. Look at the red line, the government debt in percentage of GDP. We start in the 70s around 40%. We hit the Maastricht value of 60% in the late 90s, and we are now above 100%. And that's still the aggregate, the average. And what you see is the drastic deterioration in the primary and structural government balances. So that's in aggregate terms. And there is a very nice paper by Cecchetti and others from the BIS who look at individual countries. The worst is Japan. The baseline scenario, the red line, would mean that we are already above 200% debt of GDP. We would cross the 300% line before the year 2020, and then the curve disappears in the sky. It won't last that long, I cannot imagine. With small gradual adjustment or reforms to age-related spending, the Japanese could improve somewhat, but I do not think they get back into any viable region, whatever they do. Interestingly, the demography doesn't help very much because the Japanese are not getting old, they are old already. UK, the scale is a bit different here, but also UK is on leaving the path of virtue. So are the US, so is actually Spain. And Italy is interesting because if Italy could kill the elderly, they would still have a very good perspective. Yeah, there was the French guy who said, faut-il tuer les vieux à la naissance? That would be it. So let's look at a more fiscally disciplined country like the Netherlands. They are below 100%, but the baseline scenario looks really, really bleak. Okay. What does that mean? We will not get around debt reduction, and debt reduction will be the economic topic in the next 10 years. And there are actually only two ways to reduce debt. One is via politics, via consensus, or via conflict. The other is via the market, and that will lead to instability, as I may explain in a second. Let me first look at conflicts, and for once, why not pick Switzerland rather than more problematic countries? So we do have some initiatives that all represent conflicts about the distribution of debt or about the reduction in assets we need. I mean, if you want to cut someone's debt, you always have to cut someone else's assets, right? Every debt is the black side of a claim, which is the white side. You can only cut the one if you cut the other. There is an interesting paper by Reto Völmi from University of Basel who looked at the development in the earning share. So in the top 1% earners have increased their share in the last few years, and in particularly the winners were, so tax units, that's the total, so to say, the employees and the the top earners were the employees. You can also see that in the top 20, where employees and self-employed actually made a leap forward of around 3 percentage points of total GDP. That's you could call the bonus bulge or the bonus hill. Okay. So that's the one side. That's the political side where we will have to discuss about who bears the cost of cutting debt. If we do not, the market will solve the problem by its own by making things very unstable. Let's take the Greek debt. Either you cut it or the market will write it down anyway. So the value will be lost in the market if there is not a haircut, and the same applies everywhere. The problem, and that's a problem for your advisors, or for those among you who are portfolio management advisors, the problem is that the world becomes unstable because it will, as I mentioned this morning, will be full of self-fulfilling prophecies. Economists call that multiple equilibria. Like a bank run, either everybody wants to run or nobody wants to run. And it can make a very small difference, like a piece of news or an unfortunate remark of a policymaker to make the people run or stay. Or it takes a rating downgrade, and there is a run against the country. Or take the example with the US this morning. So it's rated down half a notch. And the investors go and buy because they think times are uncertain, we have to buy US Treasury bonds. But then what happens after the next rating, before we are at the CCC rating, investors will say, no, now we have to get out. But you have no idea at what point of time they get out. There is an episode from the internet bubble, when I think it was in 2000, in March, an investment manager, a hedge fund manager, was actually dismissed. He was sent off because he had not jumped on the internet bubble. In June, another one was dismissed because he didn't get out early enough. So once you think in these kind of higher order expectations, that when it becomes important, not what I think or what you think, but when it becomes important what I think about what you think about what you think about what I think, then things become very hard to predict, and only the best investment managers will make their fortune here. One way of instability we experience in Switzerland is, of course, the Swiss franc euro, and I was very happy, or the Swiss National Bank should be happy to hear this morning that both Nassim Taleb and Hans-Werner Sinn are investing in euro. Nice to know. So for Switzerland, this constellation is a problem. Not that much because we have to be careful with our own government debt. We do, to be sure, but we get between kind of in a catch-22. On the one side, in all this instability, Switzerland is always the safe haven for foreign investors. At the same time, when we attract foreign money, then we are the free riders. And how can we get out of that? I cut a long story short. We are under pressure from the US, we are under pressure from the EU, we are under any kind of pressure. We do not always think it's fair. And as the Economist concluded, Swiss finished. So that's the plot, and now we are at the cliff. Swiss banks face slow death as taxman chases assets. That's the Bloomberg bottom line, and that is a forecast on what happens in Switzerland. And apart from the external pressure, there is also this regulation problem. I have to cut very short on that for time reasons, but we did a study at the Institute with cooperation of Vereinigung der Handels- und Verwaltungsbanken, and we conducted interviews, and we found out that 2/3 of small banks, small is below 10 billion assets under management, for those banks, compliance cost doubled within 5 years, or as a matter of fact, within less than 5 years. Even if they have been exaggerating a little bit, this is a huge increase. And this is without MiFID II, so things will become, or without FATCA actually, things will not become better. And then the banks are starved by the pressure on the tax front, and we looked a little bit into what attracts net new money. I wonder if I can increase that a little bit. Yeah. Yes. And the most important result, the most robust result, that was negative media coverage, has a negative impact on the bank's ability to attract new money. For you, that's all obvious, but of course, scientists are far away from the customer. They have to distill your very experience from some data. We also found that it's in the sweat of thy face that thou shalt eat your bread, because the positive impact is service intensity, employees per asset under management, and the generosity with which you pay your employees. Okay, so how do we deal with the problem? And in one of the breaks, I was asked by somebody, well, do not ethnical differences play a role in Europe as well? And that reminded me of an example I could use here. It's about the man who comes home, goes into the bedroom, and that's a bit adult here, so if you don't like that, you close it. He goes into the bedroom, he finds his wife in bed with another man. What does he do? If he's English, he doesn't do anything, at least as long as the gentlemen haven't been introduced. The German, I'm sorry to say, immediately calls his lawyer. The French takes off his clothes, jumps into the bed, and participates in the exercise. The Italian, of course, shoots the other man. The Spanish shoots the other man, and then the wife. And then himself. And the Swiss crawls under the bed, to check that it hasn't been damaged. Okay. That's Swissness, ladies and gentlemen. That is Swissness. He takes a sober view on the situation, a pragmatic approach, and he comes up with an expert solution. That's the success formula in political and private banking issues. Let's look at a few examples. Look, some Swiss inventions. That's a sober thing, huh? The Ziploc. And its younger brother. It's called Velcro. That's why our children cannot tie the shoes anymore. You have to send them to a soccer club to learn to tie the shoes. The font in Perimetro is from Frutiger, and so are many other fonts. That's an interesting one. That's a kind of textile that soaks oil, but not water. You use it in cleaning up of oil spills. Most recently, the Swiss found non-scratchable gold. Gold that is so hard that you can't scratch it. That's nice. Very Swiss. So you know what this is? Who knows what this is? Yeah, if you take, yes? Let's see. Yes. Yes, you're right. Okay, yeah, that's chocolate. I think it's one of the original. And that's also a very sober, very pragmatic view. Mothers did not have time to go home from the factory to cook, so Mr. Mochi invented something that made their life easier, making somebody's life easier in a sober, pragmatic, and expert way. Okay. And here comes a plan. Doesn't look like. Okay. Yes. First, take the situation as it is, like in the joke, and the situation is the Swiss financial sector is shrinking. I don't think we can change that, but it's not maybe as bad, and that's the first reason to shoot me, it's not as bad as we may think. Bankers often argue about the 12% of financial sector in GDP, which is probably also a past figure, the 12%. I use it because the health sector also has 12% in GDP. Nobody applauds that very much in Switzerland, perhaps a few medical doctors. So value creation in the GDP accounting sense is a totally neutral thing. Whether it is normatively positive or negative, depends on your point of view. The GDP is an accounting identity. You can look at it from the cost side or from the benefit side. And in the health sector, we tend to look at the cost side. In the financial sector, we tend to look at the benefits. But why should we? Nobody forces us to do so. And maybe the benefits of the health system may even be more important than the benefits of the financial system. And if you ask a French or a German tax authority, they say, well, a part of this value creation is actually created by evading our taxes, which is, if you aggregate the world across the world, is not really created value. So we should be careful here. And the jobs are not lost, but fortunately in an active Swiss labor market, they are transferred, and we still have a large number of missing engineers. And Switzerland, to remind you, is world number one in value of industrial production per head, so we can use them. And we had it is a sectoral crisis, but we had textile crisis, we had agricultural crisis, we had watch crises, and we have survived it. Right? So still no plan. Where is the plan? So Swiss banks are still important for commercial banking. They are important for many other things. We just heard about emerging market investments. And I think Switzerland has very strong trumps still in asset management. Efficiency, asset base. And asset base is important because we have a funded pension system, something not many countries in the world have. The US have, the Scandinavian countries have, and we have. So there is a base of assets to be managed. That means the knowledge to manage assets must always be here. There are not many countries that can compete on that grounds with Switzerland. If we do not manage to stay a hub in wealth management, something should go utterly wrong. We still have fiscal discipline if we are careful. And then we have this Swissness, expert solution, pragmatic approach based on a sober view. We would not have exported two finance ministers, the first Jacques Necker to the US and the second Albert Gallatin to France, and Albert Gallatin to the US, who actually cleaned up the mistakes the former presidents like Hamilton had done. Both were very successful in financial discipline. So I think the Swiss still have a very strong trump here, which they actually should play. The goal must be to get across this international problem and to get at an internationally accepted tax strategy. And there are different fronts here, and let me start an example, which is the least important. But we have been teasing the French absolutely unnecessarily with this Pauschalbesteuerung thing. Look at the Pauschalbesteuerung. What happens? This is the canton of Zurich. In 2008, canton of Zurich abolished Pauschalsteuer for foreigners, which means that the tax rate of these people roughly tripled. The fear was they would leave, and in fact, about half of them have left. But you have minus 50% people, but you have plus something like 60% tax. So the amount of tax paid by foreigners has actually somewhat increased. So this is the Laffer curve in disguise, of course. So in the political discussion, very often people argue that we should actually maximize the number of people who come to Switzerland because they get a flat tax rate. But that's not an economically meaningful goal. We should maximize the tax revenue, and that is perhaps not achieved if we give these people the flat rate option. I'm not counting that when, let's say, Michael Schumacher leaves Switzerland, that leaving a kind of a huge real estate, we would have perhaps 4 or 5 millionaires moving into that space when he has left. But that's not an important issue. We just made it important because we mock the French. The very dangerous area is the corporate tax. And I'm not a specialist here, and we don't have the time. That's why I'm just too happy to jump across it. But when we talk about bank secrecy, we shouldn't forget that corporate tax may be even more dangerous. With bank secrecy, things have become a bit complicated. I'm a member of a federal expert group who should define a strategy here. That's one reason why I should not go into too much detail. The other reason is there you really have to crawl under the bed for a long time to understand what's happening on top of it. I do not think that customer examination by the bank is really possible, or this kind of self-declaration by customers. Abgeltungssteuer is, of course, very important, particularly for the legacy money. And information exchange, that's the hot potato. Some Swiss banks are touring around the country and saying that's the way to go. Others say if we do that, then we can close down the shop. One problem with information exchange is it's very, very complicated. What kind of information is exchanged? At whose initiative is it exchanged? Is it exchanged automatically between authorities? It is exchanged on request between one authority and the other, and if the request is there, what informations or what legal instruments does the investor concerned get? I hesitate to go into details. I see there are lawyers around who know all these things much, much better than I do. If the Swiss would subscribe to automatic information exchange, they would probably exchange information about the ultimate beneficiary of the money, as under money laundering regulations, while other countries would probably not be as careful as that. So it's very, very, very tricky. I think the fallback option in all this is falling back to an international standard, but not the Swiss way in waiting too long until there is no other possibility than accepting the standard and then doing 10% more, the Swiss finish, to have a clean shirt. In a much more aggressive way, go to the international community, tell them, look, we want to be a leader in the development of those standards because we know how you can evade taxes and we can bring in our know-how if we want to avoid tax evasion. Then we can really help you. I mean, read this Article 26 of OECD. It's hard to understand. It's formulated around 2 million corners. I think the Swiss could do that better. If we succeed, you can say it's just a glorious defeat, isn't it? Or is it an opportunity? Even though we have been forced, opportunity, that went through my head this morning. Doesn't that come from Latin, opportet, which does not mean we have a chance, but we have to. We have to do something. So it's a defeat, but an opportunity is just, we have to do something at the point of the sword, and it's not the first time. How did we get to Roman law? Did we voluntarily import it? How did we get to neutrality? We got one on our head at Marignano. Not even sovereignty was welcome here, particularly not by the original cantons, but after the Peace of Westphalia, the Uri, Schwyz, Unterwalden, they were just too happy to report to the German emperor, but the French didn't want that. They wanted a sovereign Switzerland because they wanted to weaken the German emperor. And as a side product, we became a sovereign nation. We did not want the national currency. Yeah? The Swiss were against the national currency, against the decimal system, and Napoleon said, well, I can get through one of the two, let them have the national currency, and they left us without the decimal system. That's why we have 16 francs in 1800. Of course, you know what the colors were on the Swiss flag. At the time, that's the Helvetian Republic. That's red, yellow, and green, what is today known as the Rastafari colors. It was the only combination left, all the beautiful ones, red, blue, white, and everything had already gone, even red, yellow, black, and stuff like twice. Right? So in 2013, what is the frog we have to swallow this time? The frog we have to swallow this time is that we have to come clean on tax issues. So there is a wall crumbling, and we have to tear it down as fast as possible. And I'm sure he will shoot me for that. We have to stop with this distinction between tax evasion and tax fraud. I'm not talking about de minimis. Of course, if I write an article for Neue Zürcher Zeitung and I get 2 bottles of wine or 80 francs or something, I forget it. I do not want to go to jail. But for repeated and substantial tax evasion, I think we have to say this is a criminal thing, not primarily in order to send people to jail, but in order to get the same legal means we have against tax fraud, namely to open the bank relation of the person. So to abolish the bank secrecy for substantial tax evasion. If we do not, we can continue in developing what was the worst Swiss brand invented ever. That is Swiss private banking. That's where we are. And if we go further in that direction, we can close down the shop, because the very fact of having a bank account in Switzerland counts as almost a crime internationally, and then we lose the very customers we actually want to keep. And we should remind, what was the best Swiss brand ever? What was the best Swiss brand ever? That's the Red Cross, right? This is something that has a charisma that lives on after hundreds of years. And now we say, well, of course, the professors, they have easy talking. Huh? They are sitting on safe jobs at universities. They like to be the nice guy. Yeah, that's cheap. Huh? But it's not about being the nice guy. And let me finish with Dürrenmatt. What happens with Frank V's bank at the end? They want to liquidate it. It is rescued by the state because the president of the state said, I do not need a scandal now. We are covering that up. And Frank V is replaced, actually killed, by his very son, who becomes Frank VI. And the son and his sister start to run the bank. And they say, we want to have an honest bank now, but honesty, I have the original text here, honesty is not a matter of the interior, but of the organization. And you need much more ruthlessness to be honest than to be bad. Only real crooks are able to do the good. Thank you.
Thank you so much, Professor Birchler. Truly interesting and entertaining presentation. Thank you very much. Time for our very last break today, 15 minutes. Check your emails if you must, meet new people if you can, grab a coffee, and please be back in 15 minutes for Nassim Nicholas Taleb. Thank you.